The Little Book of Common Sense Investing, The Only Way to Guarantee Your Fair Share of Stock Market Returns by John C. Bogle is a seminal work on investing that advocates for a straightforward, practical approach to investing in the stock market. Here are the key concepts and principles from the book. Core concepts. 1. Index investing. Bogle, the founder of Vanguard Group and creator of the first index mutual fund, champions index investing as the most effective way for individual investors to achieve market returns. An index fund aims to replicate the performance of a specific market index, such as the S&P 500, by holding all or a representative sample of the securities in the index. 2. Cost matters hypothesis. One of Bogle's main arguments is that costs, such as management fees, transaction costs, and taxes, significantly erode investment returns over time. By investing in low-cost index funds, investors can minimize these costs and keep more of their returns. 3. Market efficiency. Bogle argues that the stock market is largely efficient, meaning that it is difficult for active managers to consistently outperform the market through stock picking or market timing. As a result, most actively managed funds underperform their benchmarks over the long term after accounting for fees and expenses. 4. The power of compounding. The book highlights the importance of long-term investing and the power of compounding returns. By staying invested in the market and reinvesting dividends, investors can benefit from the exponential growth of their investments over time. Implementation. 1. Buy and hold strategy. Bogle advises investors to adopt a long-term buy and hold strategy, avoiding the temptation to time the market or frequently trade. This approach minimizes transaction costs and allows investors to benefit from the long-term growth of the market. 2. Diversification. Investing in a broad-based index fund provides diversification across many sectors and companies, reducing the risk associated with individual stocks. Diversification helps to smooth out returns and reduce the impact of any single investment's poor performance. 3. Stay the course. Bogle emphasizes the importance of discipline and patience in investing. He encourages investors to remain focused on their long-term goals and not be swayed by short-term market fluctuations or media noise. This stay-the-course philosophy helps investors avoid costly mistakes driven by fear or greed. Key takeaways. Simplicity and low cost. Investing doesn't have to be complex. By focusing on simple, low-cost index funds, investors can capture their fair share of market returns. Long-term focus. The best way to achieve investment success is through a long-term, disciplined approach, avoiding short-term speculation. Market returns. Trying to outperform the market through active management is a losing game for most investors. Instead, aiming to match market returns through index investing is a more reliable strategy. The Little Book of Common Sense Investing distills John C. Bogle's decades of experience and wisdom into a clear, actionable guide for individual investors, emphasizing simplicity, cost efficiency, and a long-term perspective as the keys to investment success.